This is a step-by-step guide on buying your first home in Australia. From setting goals and assessing your financial situation to making offers and finalizing settlement, we'll provide you with invaluable tips and insights that will empower you to make an informed decision throughout your home buying journey. If in the end you find value in this video, please consider hitting that like button, as it really helps out the channel. And a big thank you to all our subscribers who your support inspires us to create more content, which we hope you'll enjoy. Step 1, establish a clear goal and timeframes for home ownership. Purchasing a house is undeniably a challenge and time consuming. In fact, for many, it can take well over a year just to save up for a deposit. Despite the hurdles, home ownership offers immense rewards, such as building equity and increasing wealth, which provides stability and comfort, having a place to call your own. To begin your journey towards buying your first home, it's critical to set a clear goal and establish a realistic time frame. Here's how to get started. Determine your readiness. The first step is to evaluate whether you're genuinely prepared to take on the responsibilities and commitment of being a homeowner. Consider your current financial situation, your career stability, and your long-term goals to ensure home buying aligns with your plan. Next, define your home ownership goal. Once you've determined that you're really ready to buy a home, it's time to clarify your goal. Consider the type of property you want to purchase, its location, and your budget. Once you've determined that you're ready to buy a home, it's time to clarify your goal. Consider the type of property you want to buy, its location, and your budget. This will give you a concrete target to work towards. Write down your goal. Putting your goal in writing can serve as a constant reminder and motivation throughout the home buying process. On a piece of paper or a dedicated journal, clearly state your goal of buying a home along with the specifics you've outlined in the previous steps. Set a deadline, and establishing a deadline for achieving this goal can help you stay focused and on track. Choose a realistic time frame based on your current financial situation and the time needed to save a deposit, securing finance, and finding the right home. Keep in mind that the home buying process can take longer than expected, so it's essential you remain flexible and adaptable. Step 2, assess your current financial situation. At this stage, you'll need to examine two factors. The first is your borrowing capacity, and the second is the funds needed. Let's take a look at the first, which is your borrowing capacity. The initial step involves determining the loan amount the banks are prepared to lend to you. They'll do this by evaluating your income and expenses. For instance, let's say your borrowing capacity is $800,000. This doesn't mean you can buy a home for this amount. Without a deposit, your buying power might be nil, and it's something we'll delve into in a moment. Once you know your borrowing capacity, consider whether you can comfortably afford the mortgage repayment. A general rule of thumb is that your repayment shouldn't exceed 30% of your income. Additionally, consider both your current and future ability to afford the mortgage. Do this by calculating your repayments on the amount you plan to borrow and use a 7% interest rate. Compare this figure to how much you're saving and spending on rent. If the mortgage repayment is equal or lower, then you're in a good position. Now, let's examine the necessary funds. The amount of money required to purchase a home can widely range from 5 to 15% of the buying price, depending on your specific situation. This is because as a first home buyer, you can access various schemes and grants. As a general guide, aim to have 10% saved up. As an example, if you intend to buy a home for $700,000, then aim to save $70,000. This is a rough estimate only. The best way to navigate through this process is by working with a mortgage broker who will evaluate your current financial situation, informing you of the amount that the bank can lend to you, helping you determine the necessary savings needed, and explain all the hidden fees associated when buying your home. Your mortgage broker can also inform you about any additional benefits you may qualify for, such as government grants and schemes that are currently available. Step 3, get pre-approval. A pre-approval is in essence the amount of money that the bank is willing to borrow to you based on your unique personal circumstances. Having a pre-approval will allow you to make more robust offers on properties with shorter financing terms, potentially securing you a better deal and moving into your dream home sooner. However, be cautious. Not all pre-approvals are dependable. Different banks have varying approaches to assessing a pre-approval home loan application. In many instances, a pre-approval merely suggests that the bank is open to considering your loan application. They might only perform a credit check and not verify any of the documents you've submitted in completing your mortgage application. As a result, it's critical to understand that not all pre-approvals guarantee a final loan approval. Therefore, when talking to your mortgage broker, make sure when applying for a pre-approval, you get a fully assessed pre-approval, which is really the gold standard, and understand all the conditions associated with the pre-approval on offer. Step 2, slow down. Many first home buyers often fall in love with a property, which can cloud their judgment. Just because you're financially prepared to buy a home doesn't mean you should rush into purchasing the first seemingly suitable property. Never feel pressured by a real estate agent. They work on behalf of the seller, not you, and their goal is to close a deal as quickly as they can, which may result in pressuring tactics. If you feel rushed, then take a step back and reconsider. Remember that buying a property can be an emotional decision. So consider the following before making any commitment. Recognize that the first home is unlikely to be your forever home. It's just a stepping stone towards your dream property. Budget for repairs and maintenance, especially for older properties that may require updates in the short term. Conduct thorough market research on the property types you're looking for, regardless of your intentions. This research will help you avoid overpaying and ensure you're getting a reasonable quality property. Step 5, start house hunting. Before you attend any open homes, it's essential you create your property wish list to keep your search focused and efficient. We have templates available on our website to help you with this, and you can go to huntergalloway.com.au/resources to download. Prioritize your needs and wants. Identify the non-negotiable features such as a number of bedrooms and bathrooms, as well as the desired location. Then list your wants, such as a big backyard or a pool. Consider your future plans. Are you planning on expanding your family or working from home? Remember that finding a home that checks all the boxes may be very difficult, so be prepared to compromise on some aspects of your checklist. Now you have your wish list, it's time to attend open homes. Here are a few tips to make the most out of your visit. Plan ahead. Make sure you schedule the open homes you want to attend and research each property beforehand. Take pictures and notes. Document each property to help you remember the pros and cons of each. You're going to be seeing a lot of properties on the day, and don't be surprised if it all becomes a blur. Don't be afraid of asking the real estate agent questions about the seller's motivations or if you have any concerns about the property information at hand. Other things to consider when buying a home includes location. Is the property in a desirable neighborhood with good schools, amenities? Assess the overall state of a property, including any necessary repairs or renovation, size and layout. Step 6, make an offer. Our lives are really a series of negotiation. Whether it's convincing the kids to go to bed or asking for a pay rise, you've already experienced many negotiations in your life. Buying a house is just another negotiation, with the stakes being a little higher. Before starting any negotiations, you must be clear about your budget. Before making an offer, the first thing you want to establish is your walkaway price, which is the absolute maximum you're willing to spend on this particular property. If the price exceeds this limit, it's time to walk away and find another property. This price should be set based on 2 factors: the amount you're pre-approved for and the amount you're willing to pay for the property. The next step is to negotiate effectively. And to do this, you must understand the property's true value. There's various ways to do this, from looking at recent sales data available online to asking your mortgage broker for a property report, which will complete this process for you. Knowledge is power in the negotiation. Use calibrated questions that lead with a what and how to gather information from the real estate agent. These are non-threatening questions which give the agent time to think and possibly reveal some information for your negotiations. Don't be afraid to ask the same question in a different way to gather as much information as possible. Remember that a good real estate agent works to get the best possible outcome and price for the seller, not you. Step 7, questions to ask before signing the contract to sell. The contract to sell is a legally binding document between the buyer and seller outlining the terms and conditions of the property transaction. Before signing anything, it's important to read, review, and understand the conditions. Here are 5 questions you should ask before signing the contract to sell. Are you getting what you're looking for? Check the registered plan attached to the contract to sell to ensure the property matches the property you've inspected. How much deposit do you have to pay? Understand the required deposit, which typically consists of a holding deposit and a larger deposit paid within a specific time frame. Does the contract to sell include any special conditions? Review any special conditions included in the contract. How long is the settlement period? Does the contract include a cooling off period? Be aware of the cooling off period specified in the contract and any financial penalties for withdrawing from the contract after signing it. Always seek advice from your solicitor or conveyancer prior to signing any documents, and once you've signed a contract to sell, keep in mind it is binding. To understand any uncertainties and guarantee a thorough understanding of the terms and conditions you're consenting to, it's best to have your contract reviewed by a solicitor or conveyancer before you sign anything. Step 8, obtaining formal finance approval and paying your deposit. After signing your contract to sell, you'll need to pay your deposit. As we've already mentioned, this is typically paid in 2 parts: your initial, which is paid when you sign the contract, and the balance, which is usually paid upon finance approval. It's best to obtain insurance for your new home. In many cases, purchasers are responsible for the insurance from the moment the contract is signed. So if something happens to the property, even if you don't buy it, you may be responsible for the damages. It's time to secure your finance approval. To do this, you'll need to send a copy of your contract to sell to your mortgage broker. At this stage, you will already have a fully assessed pre-approval. So all that's left to do is for the bank to arrange a valuation and complete their approval process. Remember to arrange your building and pest inspection too. These reports can help assess the property's condition and uncover any hidden problems. Step 9, finalize settlement. Congratulations on making it through to the settlement stage. You've successfully navigated the most challenging part in buying your first home. Now it's time to wrap up the process. You'll do this by arranging a pre-settlement inspection. Before taking any possession of your new home, it's a really good idea to arrange this inspection. This will allow you to ensure that the property's condition has not changed since the last time you visited it, and that any agreed upon repairs or improvements have been completed. If you find any issues during this inspection, discuss this with your conveyancer or solicitor to resolve before moving in and settling on the property. Next up is arranging your utilities and connection and any mail redirections. Before moving into the property, it's essential you have things such as your gas, electricity, and internet all connected and functional, settlement and receiving the keys. Once you've taken care of all the essential details, it's now just time to complete the settlement process. On the agreed upon date, the property will be officially transferred in your name. You're now the proud owner of your first home. After settlement is complete, you'll receive the keys to your new home, allowing you to begin the next chapter of your life. Remember, buying your first home is a journey that requires a lot of patience, persistence, and sound decision making. Here at Hunter Galloway, we're mortgage brokers who help get home loans approved. We help Australia-wide and don't charge a fee for our service. So reach out and contact us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.